The first quarter of 2021 is in the books, and it's time for an updated housing market report. It's also time to start unraveling the coming changes in home affordability. I want to thank all of our viewers who have been asking great questions. Recent comments and feedback have led me to tackle the home affordability issue that is brewing. So please keep your questions coming. They do impact the future videos on our channel. We start today's video by comparing the first 3 months of 2021 with the same months in previous years in order to identify trends in the housing market, specifically the changes in supply and the changes in demand. We'll examine current housing market conditions, mortgage interest rates, and home sales trends to give you an idea of where the market is heading as we move into the hottest months of the year. While the data I use is from the Tallahassee real estate market, I'm confident that it parallels most U.S. housing markets that are experiencing very similar conditions. You can take the lessons learned from this video and apply them to your market area as well. At the end of this report, I provide a look at how home affordability is likely to change over the next 20 years. I can produce the forecast by simply using the data from the past and applying it forward. If you have a stake in the housing market, you don't want to miss this forecast. Finally, I've included a link below to all the current listings of homes for sale in Tallahassee. I've done this so that you can see that as asking prices decline, the percentages of homes under contract goes to a very unhealthy high. Hi, I'm Joe Manausa, author of The Business of Getting Business and the creator of Manausa.com, where I've helped tens of thousands of people buy and sell homes. I would like to help you too. If you already are a subscriber, thank you and welcome back. If you're not a subscriber, please consider becoming one now. We offer the most thorough and accurate housing market reports on YouTube, plus answers to your real estate frequently asked questions. We also provide virtual tours of some of the most beautiful homes in Tallahassee. Please remember to like this video, hit subscribe, and click the bell so that you're the most informed buyer or seller in your next real estate transaction. The first graph in today's report shows how each month's sales compared with the same month the year prior. We refer to this as the year-over-year home sales. Year-over-year home sales comparisons provide insight into the market changes by removing the seasonal changes in the market. By only comparing the same month in different years, we eliminate concerns that the time of year could actually be affecting the results. For example, we only compare January to January or June to June, thus the seasonal changes in real estate are not a factor. Year-over-year home sales rose 11% in March, registering the 7th straight month of gains and 8 out of the past 9 months. Last year, we saw home sales decline sharply in the second quarter as COVID became a fact of life in Tallahassee. Thus, it's highly likely that we'll see gains continue for the next 3 months. Though mortgage interest rates have been creeping higher for most of 2021, last week saw them dip lower for the first time since the first week of the year. The low mortgage interest rates have buyers chomping at the bit to get into a home before rates begin to rise permanently. Contrary to demand, the supply of homes for sale continues to drop. Here we see the count of year-over-year fresh listings entering the market. Just as we saw in the first graph, this graph compares each month of the year with the same month from the year prior. We're looking at the change in fresh new listings entering the market, where fresh means only those homes that were not previously listed before. For the third consecutive month, fresh listings dropped at an alarming rate. As we move further into the report, we'll see how this is impacting both sellers and buyers alike. This graph shows the number of homes sold during the first quarter in each of the past 20 years. 2021 has started the year strong, with the number of homes sold sitting as the third best year ever, trailing only 2005 and 2006 when speculative buyers caused the market to explode. What's so exciting about this graph is that we're seeing organic demand strong and healthy, with no substantial inorganic demand skewing the numbers. If you would like a good explanation of these two types of demand in the housing market, click the link below to see a recent report about the potential for a new housing bubble. The big takeaway here is that demand is strong and growing. So now let's take a look at the supply side of the market. This graph shows the number of fresh new listings that entered the market each month, segmented by existing homes versus new construction homes. In 2021, we have seen the second fewest fresh listings for the first quarter of each of the past 8 years. Existing homes entering the market are just one home short of being the worst of the past 8 years, while new construction listings are ranked as the third best. With inventory shortages being pronounced and obvious since 2016, it'd be nice to see fresh new construction listings ranking as the first best until the housing market stabilizes. But that is apparently not going to be the case. This means that bidding wars on the relatively few homes for sale will continue to escalate now that we have seen the inventory reduced to a new all-time low. If you are wondering why it's so hard to buy a home today, this next graph shows what happens when demand continues to rise while at the same time supply continues to decline. Here we see that a higher percentage of homes for sale in Tallahassee under contract with buyers than ever before. That means slim pickings for buyers and favorable market conditions for sellers. Nothing is more frustrating as a buyer than finding the perfect home, only to find out somebody else beat you to it. But that's what's happening to many buyers today. More than 3 out of every 5 homes listed for sale right now are already under contract with buyers. The green line in the graph shows that 63% of the current listings are already under contract, and the one-year trend has reached an all-time high of more than 50%. This graph was produced 10 days ago, and we've seen these numbers get worse. On average, more than 1/2 of all listings were under contract with buyers at any given time over the past year. So when you consider that we're dealing with the lowest inventory that I've seen in 30 years selling homes in Tallahassee, the reality is much worse, as half of the few listings are not really even available. Currently, we're seeing inventory decline, and now 2/3 of the listings aren't really available to buyers. Anecdotally, I recently saw that 82% of the homes listed for sale in Killarn Estates, one of our largest neighborhoods in Tallahassee, are already under contract. When you consider that this time of year we normally see about 1/4 of them under contract, you can understand why it's so tough to buy a home today. We are expecting more sellers to enter the market over the next 4 months, but we're also expecting more buyers due to the seasonal changes that occur this time of year. More buyers and more sellers will not likely cause much of a drop in this ratio, and don't be surprised to see if it continues higher if too few sellers list their homes. Let's discuss what this means exactly for today's buyers, and we'll compare it with what buyers were seeing at the beginning of this graph in 2011. As I produced this report, there were 1,140 homes for sale in Leon County, but only 387 of them are really available, as buyers have the other 753 already under contract. With just 387 homes available, it's going to be tough to put together the 450 to 500 closings in May that we were expecting. There are just not enough homes available for today's buyers. So a buyer today has just 387 homes available to purchase. At this time in 2011, there were nearly 4 times as many homes available, and there were far few buyers looking at them. The competition for the few homes is so high today, buyers don't have time to think. They must react fast when a new home hits the market. This means today's buyers have to be prepared well ahead of time. If you go looking at houses before you get your finances in order, expect to be heartbroken. You'll lose out on the home you love, only to find homes more expensive once you get your affairs together. Smart sellers are taking cash offers or offers with limited financing contingencies and no contingency for appraisal. So forget about getting your dream home with a contract that asks sellers to wait for you to find financing. Again, get your loan documents completed before looking at homes. It's the only way to entice a seller to even consider your offer. This real estate cycle is so extreme, buyers need to understand that they're not going to be negotiating with a seller. Rather, they are going to be competing with other buyers for the right to buy the home. The question of what to offer begins at the asking price and moves higher for properly priced homes. I strongly encourage all buyers to meet with a buyer's agent to put together a complete acquisition plan so that when the right home is found, you can make it your own. Remember, other buyers will be bidding on the home too, so you have to appear strong so that the seller will even consider your offer. So to summarize our report thus far, demand is strong and supply is insufficient, causing buyers to have to compete with each other over the few homes that are really available. The next segment of our report will examine how the supply and demand dynamic is impacting home prices and home values. The best way to measure real estate appreciation across the market is to measure the change in the median existing home value each year. We simply record the price per square foot of each home sold and then find the median for each year. For the first 10 or more years of my career, we saw real estate appreciation average a little more than 3% each year. But the craziness of the housing market in the early 2000s has created chaos since. This graph plots the change in the median home value each year. Blue bars show growth, red bars show declines. The graph shows clearly that the rampant appreciation that began last year has continued. Look at 2021. The appreciation is already higher than what Tallahassee records in a typical year. In an earlier market report, I had forecast the potential for double-digit appreciation for 2021. Through the first quarter of the year, appreciation is more than 4%, an annualized rate of more than 17%. If builders don't ramp up production for 2021, we could see existing home values rise at an alarming 20% or more in 2021. To put that in perspective, that means a $250,000 home purchased in December of last year will be worth more than $300,000 in December of this year. While that might seem wonderful, as most people's largest investment is their home, you have to worry that home affordability might soon be lost for all but the wealthiest people. I don't want to see that happen. This graph shows how the median home price has changed in Tallahassee since 2003. The median's not the average, rather it's the price of the home in the middle when all homes are lined up according to each sales price. Take a look at the rapid rise in home prices. The median home price for existing homes is $217,000. For new homes, the median is shot above $324,000. And overall, the median home price in Tallahassee today is $235,000. That means the middle of the market is 3.1% more expensive today than when we began the year. With supply low and demand relatively high, we expect to see the median home price rise for the foreseeable future. So far, I believe I've made it clear that the supply of homes for sale is far too low and the competition for available listings is fierce among buyers. This graph serves to show why demand remains strong and what we'll need to see before demand significantly declines. Home affordability is going to be the greatest challenge that the housing market faces over the next 10 or more years. What most people do not understand is that today's homes are nearly more affordable than they've been during all of the previous 30 years of my real estate career. Let me show you what I mean. This graph was created by adjusting home prices for inflation. Inflation is the gradual increase in costs and prices over time as money loses value. The prices in the graph have been adjusted for inflation, meaning that each year's price over the past 30 years has been converted to $1991. I simply took the average home price each year, divided it by the Consumer Price Index for that year, and then multiplied by 100. This calculation created the blue field in the graph, where each year's home price was adjusted to a 1991 home price. Then, I used the adjusted home prices and combined them with historic mortgage interest rates to determine the average monthly mortgage payment for each year. This payment is plotted in red and measured on the right vertical axis. It is this red payment line that we use in the discussion of home affordability, and homes gain in affordability as the payment lowers, while the opposite is true when the payment rises. When we adjust these payments for inflation, we find that 2012 was the most affordable year for the average home in Tallahassee, with the average monthly mortgage payment just $427. Remember, that's $1991. The opposite end of the spectrum was in 2006, when the average monthly mortgage payment was $823, again, adjusted to $1991. So how affordable is today's average home? It's more affordable now than was the average home in 24 of the past 30 years. Today's average home is more affordable than the average home in all of the 1990s decade. The average existing home today, priced at $241,000, can be purchased with a lower monthly mortgage payment at today's low 3% rate than did the $100,000 home in 1991 when the mortgage interest rate was 9.25%. Fortunately for buyers, interest rates have remained lower than all previous years' averages, meaning that the monthly payment to carry the median home has slightly declined. Rates are actually higher than they were at the end of last year, but this graph is calculated on an annual basis and used averages each year. The big takeaway from this graph is that when we adjust for inflation, we realize that today's home affordability is two things. Number one, home affordability is excellent right now. And number two, home affordability is likely better today than it will be for the rest of your life. Let me repeat that, because this is something that most people have not really considered. Home affordability is likely better today than it will be for the rest of your life, unless you're young. That's right, I think we hit the bottom for home affordability in 2012, and it will take a significant inflationary period for future dollars to come down to today's $507 monthly mortgage payment adjusted to $1,991. There are too many factors working to erode home affordability, led by rising mortgage interest rates and the rising costs of new construction. Homes will be getting more expensive, and so too will be the money used to finance home purchases. This double whammy will take home affordability to a level that will make home ownership much tougher than I have seen during my 30-year career. Our final graph is a fair estimate of how home affordability could easily progress knowing what we know today. I continued the previous graph through the year 2040. The table within the graph shows the annual measurements, and I'll tell you that they are not far-fetched and could easily happen. In fact, I would say these are very conservative forecasts. I had mortgage interest rates stay the same as present rates for 2 years and then increase only 0.25% each year. Home prices moved up 15% for 2 years, 10% for 2 years, and stabilized at a 5% growth rate. And the Consumer Price Index used was the average over the last 30 years. Based on the history of these 3 data sets, this could easily happen. Am I forecasting this? Not yet. I have not given it enough thought, but I will warn you, this is a very conservative estimate of what could happen. If inflation is higher over the next 20 years than it was in the recent 30, then that would bring down the adjusted home price and mortgage payment. But look at the graph. It will still be a housing market that is far less affordable than what we have enjoyed in the past. When I see this graph, I have a hard time believing that mortgage interest rates will stay below 8% for the next 20 years. The reason that I kept them low, however, is that the Fed has promised to keep rates low unless inflation moves well above 2% for more than a year. As my model calls for 2.23% inflation each year, it means that the Fed would move rates higher slowly. As far as home prices moving higher, I had them move up by 15%, 15%, 10%, 10%, and then 5% per year thereafter. And I think this might be far too conservative. I'm actually expecting home prices to move higher at a faster rate, but I wanted a forecast that most people could wrap their heads around. Florida's minimum wage will move higher at a faster rate than ever, up 75% in the next 5.5 years. I know many other states are considering or have already pushed to do something similar. An increase in the minimum wage will have an impact on many aspects of the economy, and specifically, it will add to the cost of materials and labor required in building more homes. Couple this with the current low supply of homes for sale and the ongoing hyperinflation of real estate, and I think my forecast for home prices is very conservative, though adjusted home prices could soften. We are in the midst of the seller's market of the ages, with demand far exceeding the existing supply of homes at all but the very top prices in the market. If you have a home to sell and market it correctly, you will get offers on the first days your home is available to be seen. Ensure your broker uses an omni-channel marketing plan with a prolonged pre-marketing period, and you'll be able to choose from the multiple offers that you will receive. When mortgage interest rates rise, it will have an immediate and significant impact on demand if rates rise too quickly. The luxury homes market could very well go dormant, as it has been super hot over the past few years, setting a record for sales last year and continuing thus far in 2021. The top end of the market is the most susceptible to collapse due to rising mortgage interest rates, so high-end sellers need to make hay while the sun is shining. So long as rates rise gradually, we'll see demand cool in the market, but not in an overly damaging way. The lower demand will increase the relative supply of homes and hopefully slow the out-of-control appreciation of home values. I would expect to see this happen once the Fed gains confidence in the economy, but forecasting the future of change of mortgage interest rates is highly speculative. Today's real estate market conditions make it the best time I've seen in my 30 years selling homes in Tallahassee to sell a home within a predictable time frame. If you are wanting to move, do so now so that you can sell your current home fast and get into your new one financed at a very low mortgage interest rate. If you would like to see more videos about current housing market conditions, I've assembled a great playlist that you can view by clicking on the box on the top left corner of your screen. For a playlist of answers to questions from viewers just like you, just click on the box below it. Please remember to like this video, check out the links below it, and subscribe to our channel so that you never miss anything.